Good afternoon, everybody. Welcome back to another Bullishbrs live stream. Usually we live stream if we're hosting a webinar or if we're hosting some live streams in the morning when we're trading live. Today we're going to do a weekend pre-market charting session. We're going to be charting the ES, the NQ, crude oil, which is CL, and GC, which is gold. So any Forex traders who also trade something like gold as well on Forex or even NQ or ES, you could also get an idea for the price action going off of today's little bit of a breakdown. I am wearing glasses. I know I usually never wear glasses. I don't wear glasses. These are, I forget what they're called, but they're glasses for the monitor. Personally, I've been dealing with a bit of a migraine today, but I didn't want to miss this session for you guys because I know I told a bunch of you that I would do it. So bear with me a little bit today. I am dealing with that migraine. Hit that like button, hit that subscribe button. I appreciate you all for tuning in. Let's get into some charting. So right off the bat, we're looking at ES 15-minute time frame, and what a mess. We have a broken supply zone that I turned green because I wanted to see it work as demand. We have a broken demand zone that is still left there. It's time to delete these. We have a used but still valid demand zone as well. Thank you. Yeah, I'm telling you, I usually don't wear glasses. I never wear glasses. They are not prescriptions. They are for the monitor. So let's start up by cleaning our charts, right? So we're going to get rid of anything that will be of no help. So we're going to delete anything that's internal demand zones, internal supply zones, zones that have been ran through, zones that have been broken. And now we're already looking at a bit of a clearer picture. So we had a 15-minute imbalance here that took a few days to retest, and we ended up creating a demand zone over that. I'm going to delete that out. This demand zone did end up holding 1 and 2 times. So we're going to mark out again. We got rid of all of these sell side liquidities. We're going to break all of those. This one, previous day low, it's no longer a previous day low. We're just going to mark that out as a sell side liquidity. Good morning, everybody, or I should say good afternoon. I'm used to live streaming in the mornings. We're going to mark out our new high up here, 58.30. We're going to mark this as a buy side liquidity. So I know that there are buyers that are looking to enter the market here, and there's also sellers looking to stop out up here. So this is an area that there could be potential for a pullback or reversal. As a lot of people know or have seen in our streams, we look for that accumulation, manipulation, and distribution. Good morning, everybody. Keep doing that. Good afternoon, everybody. So now that we are on the 15-minute time frame, I'm also looking for potential supply or demand zones. I see a potential 15 right here where we had a basing candle. We had a drop with no, look at this wick right here. So there's almost no wick pushing back higher. So it was an impulse move lower, leaving a bunch of sellers unfilled. So that's our imbalance. And then we had continuation. So we're going to mark this green candle out as our 15-minute supply zone. And I'm going to be watching this supply zone Monday for potential shorts because it's a very tight zone. So I could see that I'm going to have a very tight stop loss on it. And we could look to sort of play the range. So we could have a 3.75 stop loss and we would target the next low. So we would target a new low just like we are here, right? We're making a lower high. See if we want to make another lower high and break those lows. Almost an 8-to-1 risk to reward, which is why it's so important to find good setups and do some charting. Would you be able to review SMCI chart? Yes, absolutely. Ark, let me know. Remind me, guys, we're going to do futures first. If you want, stick around, and we will cover some equities too. We'll do maybe SMCI. We'll do maybe Apple, Microsoft. We could look for some swing trades for you guys if you'd like. So right now, this is what I'm seeing on ES. I'm marking this level out as a supply zone. This is a 15-minute time frame, so we're going to come to my drawing templates. All the ones that are D are demand, all the ones that are S are supply. That way I don't have to tap it every time and write in 15-minute every time I go into the chart. Very easy charting. Love TradingView for that. I'm also going to mark out this low right here. This low is the low from Friday. So this is pretty important. And I also see that this low lines up with this demand zone right here. So not only is it a 2-hour demand zone, but we also have some sell side liquidity. I want to see if we could sweep that and hold this previous low. So that's sort of what I'm looking for so far on ES. So let's take a look at the higher time frames again. We'll check the daily. We see the daily was very strong since about September 9th up until about September 20th, where we've sort of been bit lagging, bit lacking. Market hasn't been as strong, and we're going to see that on the Nasdaq too. That it just wasn't as strong. We could check the weekly, see if there's any sign of reversal on the weekly. So what I see on the weekly chart is I see we did break and close above this previous all-time high. So this purple level, previous all-time high, so path, previous all-time high. I'll put a little period in it so we remember what that is. And this is the weekly candle, so it closed above it, but it still looks like this upper wick tells me that sellers are trying their best to push it back below. So what I would sort of keep an eye on is this weekly imbalance. Now, people call it a fair value gap, call it an imbalance, whatever you want to call it. Just don't call it late for dinner. But we're going to mark this out as a weekly imbalance. We'll make this blue. We'll add text. We'll do text inside, center, weekly imbal. And we're going to make the text a little smaller. And we're going to let that go right there. That way, when we come to the lower time frames, we will be able to see it. And remember, that weekly imbalance, where'd it go? You know what? Let me check my visibility. See how it's not checked off for days? That's where it went. So now I have it checked off for days. Now I have my weekly imbalance right there. So I'm looking for sellers to make a run for the downside in the beginning of the week. Try to trap some people. Maybe we'll take out this low right in here. This is a daily low from Friday 20th. This is when we sort of started to lose momentum. So if we could break below that low, can you guys imagine everybody switching their biases at this point? If we had a sell-off and we start pushing back lower again, people are going to say we're bearish, we're going bearish, we're pulling back. We got a short, short, short. Meanwhile, we have a weekly imbalance, and I'm sure we have other demand zones as well supporting this area. And again, we have to look, when in doubt, zoom out. We're making higher lows, we're making higher highs. The trend, being our friend, is still bullish, and we cannot argue that. So let's come down to the 4 hour. Again, 4 hour is a bit of a mess. So let's see what we could clean up. Cleaning up the charts. Every little thing that we could pull out, we will take out. We had an hourly imbalance that never got hit over here that I'm looking at. This 1 hour imbalance that was created on a 2 hour demand zone. And those both fall in that weekly imbalance that I just showed you guys. So ideally, if bears could take over and start running us through these demand zones, I would really like to see us come into this blue weekly imbalance. And I'm actually going to change the color of it. Make it more of a like a lightish purple maybe, because I want it to stand out a little bit so I know it's different, right? So I understand what we're coming into. Weekly imbalance, target to the downside before we want to push back higher. But again, all these higher highs, all these higher lows, market is still a bit strong, but all these wicks lower tell me that there are sellers that were trapped in the market that might want to try to force the market to push back lower so they could get filled or get out of their position. So now that we sort of covered, and again, I don't see any other supply or demand zones up here, we have a bit of a 90-minute. So there we go. There's something. We have a 90-minute zone right here. This is a supply zone because we have our basing candle. We have a long upper wick, not the longest upper wick, right? A lot of times I want the longer upper wick and a short lower wick to show us that there were trapped sellers, but we don't have that. So we have our 90-minute basing though, we have an engulfing to the downside, and we have some continuation. So that's why I would mark that as a 90-minute supply zone. So let's see, 2 hour, 1 hour, 3 hour. Again, just doing a quick little glance through all our time frames, make sure we're not really missing anything. Now this is arguably a 45-minute demand zone because we have our basing, red basing, long lower wick, and we have an impulse move. However, the continuation ended up failing. So I'm not that big of a fan of this zone. And as we see, we would have been able to have an entry long off of this demand, would have been able to target this previous high, but it ended up failing that new all-time high at the top of the range. Again, this is not being the strongest zone. So now that we covered ES, let's get into some NASDAQ, a favorite amongst us Bullish Bears members. And again, looking at it right now, what a mess. How can we clean it? So we're going to get rid of some blue levels, which I had as daily imbalances. We're going to get rid of some internal lows, internal highs, fair value gaps. We're just cleaning up the chart. We're going to get rid of, look at these broken supply zones. We're going to get rid of all of them, guys. We're starting fresh. We run through some zones and they're old. Start fresh, fresh start. Trading view, real quick trick for you guys. You come over to the crosshair and go to eraser. Then you could just sort of click away at everything you want to delete. So yeah, we're just quickly erasing everything. We'll keep our key levels, 20,185, 20,109. Guys, you got any questions, please let me know. And now let's get back to our crosshair and go to that daily and weekly time frame on the NASDAQ. Now, guys, real quick, let's take a look at the NASDAQ compared to the ES. Put the ES on the chart on the right-hand side. We're going to be looking at the weekly time frame. And the first thing I want to point out, without any drawings, is the divergence. We have our NASDAQ on our left-hand side that is currently failing to make a new high, failing to make a new all-time high. ES has broken and made a new all-time high. This is divergence in the market, and it suggests that there could be potential for a shift in market structure. Now, what do I mean by that? A shift in market structure means a potential for a reversal. So because of that, and I see that the NASDAQ is much weaker, we have a much longer upper wick to the upside, which again shows us that there are trapped buyers or that there are active sellers. Again, I would want to sort of see if we could push back lower. As for the NASDAQ, for its weekly imbalance, I would probably look to see if we could break below it, because NASDAQ has been a lot weaker. Look at this buy side liquidity sitting there on the weekly, so we're going to come back to the daily time frame. We're going to see, look at this daily, long upper wick, an engulfing candle on that Friday. Now, if we could get continuation to the downside, this will create a daily supply zone. So something I'm looking for on the NASDAQ is bears to step in. Now that I see the daily time frame should be keeping me somewhat bearish, assuming that we want to take out maybe these lows over here and enter that weekly imbalance, which is right there. I think I have to days. Right, so if I'm looking for a down move, I'll look for an entry somewhere up here within that previous candle and to target this impulse move down here. So I'm going to come now to the 4 hour. I'm going to see what we got. I'm going to get rid of, I'll probably end up getting rid of some of these purple levels, seeing that they are awfully close to each other. Make this our weekly, inside center, weekly, no weekly, in bow. Awesome. Guys, don't forget, leave some comments. Let me know what charts you want me to go over. We'll do some futures first, and then we'll find some equities, maybe look for some swing trades for you guys. 2 hour time frame, not really seeing anything, nothing much. 1 hour, still not seeing anything really. This is debatably a 1 hour supply zone, but it's got more of a body than it does a wick, so I'm not a big fan of it. Look at the 90-minute time frame, look at the 45. 45 is a bit of a cleaner supply zone, so for now we're going to mark that. Mark that as supply. S45. And down here I see that we pulled back, we ranged or consolidated, and then pushed higher. So that tells me there should be a demand zone right in there. There it is. Found a 3 hour demand zone. See, we just had to look for it. We saw the consolidation. We had to find what time frame it was on. And look how well this demand zone worked a couple times so far. So if anything, I'll use, this is a 3 hour demand zone. I'll see if we want to break this demand zone to the downside and retest it for a short entry. Now, for the lower time frames, if we have a 15-minute supply, that would be great. I'm not a big fan of this zone right here. It's too low compared to the recent swing highs. Maybe look for a 30-minute supply zone. I don't see any 30-minute supply zones. Really not seeing anything too clean on the NASDAQ here. So most likely because the NASDAQ has been weaker, hasn't made new all-time highs like the ES has, I will most likely be looking for a break of structure to the downside out of this demand zone, a retest of it, and a short trade lower. So right now, we're sort of leaning more bearish on ES and NQ coming into this week because of the range, because of the divergence. So now that we covered ES and NQ, YouTube guys, don't forget, hit that like button, hit that subscribe button, and let me know in the comments if you want me to chart anything specific. Right now we're going to cover crude oil. Reason I like to cover crude oil and gold is because sometimes if the NASDAQ or the ES are chopping and they're not really giving us a good move, I'm going to look at crude oil or gold for potential movements in them because they're different markets, right? They're moving differently. A lot of times if one is chopping, the other's moving well. So now that we have crude on our higher time frame, we're looking at the daily right now. We're going to mark out some buy side liquidity, which disappears because I don't have it on for the daily time frame. So we're going to do BSL and we're going to mark that out red and style, or make that red. One sec, bottom, middle, alright. So we have our buy side liquidity. We're going to come down to a lower time frame, maybe take a look at the 4 hour. I'm not really seeing anything on the 4 hour. We still have this hourly imbalance that I mentioned, I believe it was Friday. We were looking for longs, missed a really nice 8-to-1 setup on crude. I'll show you guys that in just a second. We had a, let me show you guys. We swept some lows. We held demand on crude. We created a 15-minute imbalance right here. Let me delete that inverse fair value gap. This 15-minute imbalance, which is a 15-minute fair value gap, would have served as a great entry for long positions, not once, but twice to take out a new high of day. So again, really great setup, really just being patient for that and finding that setup. And our target would have been previous highs. So again, just sort of looking for areas like this or areas like that. So let's mark out, let's again look at crude. We're going to delete everything that's old, that's unnecessary, that we do not need. We're going to keep this internal sell side liquidity, ISSL. Going to delete this, we're going to delete this, going to delete this black key level there if it'll let me. There we go. And just again, deleting everything. We're starting fresh now. We want clean charts right now. So we're looking at the 15-minute time frame. I do not see any demand zones down here. 30-minute time frame, I really don't see much either. This is what I was watching on the 30 that kept me bullish, was this basing coming out of demand. We had a strong impulse move, and that's why I wanted the continuation. So again, it would have been a great pullback entry to go along, and that's just using the higher time frame analysis. Time frame analysis is almost more important than any type of price action analysis, guys. If you're able to find and see that on even the 15-minute time frame is pushing bullish, and you were about to short that 1 minute or 5 minute, but because you checked the 15, it kept you out of it, it's going to save your butt more times than not. Now, let's see. Now, let's delete. Now, I'm going to keep this blue zone on crude. And the reason I want to keep this blue zone on crude is because it worked so well as an area of interest yesterday. Again, giving us 2 great entries. So I'll want to see if we want to re-enter it again, or if we even want to take out maybe these lows over here. I'm going to mark out this low as well. This is a sell side liquidity. We're looking to see if we want to sweep that and reverse because we'll be in a demand zone. Now, we do have another low, so I do want to watch that one. Remember, guys, if we have another low that's just a bit lower or another high that's just a bit higher that's very recent, there's a better chance that we're going to take that one out as well. And the reason for that is because a lot of people might be too zoomed in on the chart. They might be, this is the 30-minute time frame, they might be on the 5-minute, and they might only see this low, right? So they would think if we break that low and close over here, we're going to continue. Meanwhile, the real sell side liquidity that we were looking for a reversal was just a few more points lower. So it's so important to be aware of that higher time frame and finding those zones and levels. Now, back to our 30 and 15. I'm still really not seeing much crude oil. I will be keeping an eye on this blue area tomorrow, along with this whole zone in general, I should say. The reason I'm not marking this out as a 30-minute demand zone is because the impulse move and continuation was very weak and short-lived. Now that we have a bit of an idea of crude, and again, we could also go through the weekly on crude and the daily. Look at the weekly on crude was very bearish, almost an engulfing candle. But let's take a look at this weekly low. Did that take out any major pivots? It sort of took this one out right here, reversed. This pullback could be a higher low. So I'm going to mark this level right here. And this is a major L, right? Major L, major low, right? So this is a major low on crude. We're talking about 64 even. Crude hasn't been to 64 even. Well, obviously it was on Monday. I'm sorry, Monday the 9th. I'm sorry, that was a weekly candle, the week of the 9th. But before that, we haven't seen those prices since January, the beginning of this year. Now, we had some supply zones up here we rejected. We're looking at the weekly time frame. Let's look at the daily. We have a bit of a basing candle right here. So we could sort of mark this out as a daily supply zone, right? There are sellers active in there. How do I know that there are sellers active in here? Well, I could see the reaction from that zone. And the reaction from that zone, being this move lower right here, is a very strong move to the downside. And a strong move to the downside needs some type of strength, right? It needs volume. The market doesn't move for no reason. It needs volume to push it lower. So there is my daily supply zone on crude. And again, guys, if we break the supply zone, that's great. I'll look for us to be making some higher lows, and I'll look for a retest of this zone to then go along and target the next key level or the next liquidity sweep around 76.37. So we see this pivot high right here could act as a potential target if we break this supply and use it as demand. Now that we sort of went over crude, let's hit up gold, and then we'll hit into some equities, guys. Again, don't forget, drop a comment, drop a like, let me know, what do you guys trade on the daily? Are you guys trading every day? And don't forget, join us live, guys. Monday and Friday on YouTube, I go live and I'm trading all these plans you see, all the zones you see, Monday through Friday, 9:30 to 11, Monday and Friday, 9:30 to 11, and I'm live on Twitch at Futures Kevin, so check that out too. So now that we're looking at gold, again, a bit of a same type of concept as like the ES. We're making all-time highs, we're very strong, but we're sort of running into some resistance at this point. We have a few upper wicks, nothing too crazy to be concerned over. Coming into a bit of a daily imbalance, and other than that daily imbalance, we do have another daily imbalance way down here. So because of that, we're going to be keeping a bit of a close eye on those zones. And we're going to now come down to our lower time frame. So we'll check the 6 hour, check the 4 hour. And again, like the ES and NQ, guys, look at all of these broken zones I have. It's time to start fresh. Every week. If not every day, every week, you should be cleaning up your charts, whether you trade supply, demand, support, resistance, ICT, whatever it is, smart money concepts, the strat. I don't know if you guys ever heard of that one. That's an oldie but goldie. The strat. Wonder if that one's still around. So we have our basing candle right here, long upper wick, very small basing candle, and an explosive move to the downside. So because of that, I'm definitely marking this out as a 30-minute supply zone on gold. So we're going to mark this out as supply. And it is a S30 minute. Don't forget, guys, hit that like, hit that subscribe. I appreciate you guys all for tuning in. Right now, we're holding a 30-minute demand zone. So right now, guys, what's great with supply and demand is if you're having trouble finding ranges or having trouble finding highs and lows, supply and demand will do that for you. Then once you add things like previous day highs, buy-side liquidity, sell-side liquidity, it will get even easier in the sense that you're able to read the market. So right now, our range, before it was this low to this high, now we've started to break that range. Now the question will remain, was that break of the range a manipulation to the demand zone before we want to push back higher? Or was this the real breakout and we're looking for a retest of the supply zone before we push lower? So that's what I'm waiting for on gold. I do expect some more volatility and a better move out of gold than something like NQ or ES right now, just based off of sort of last week's price action. ES has been treating us pretty well, though, I will say that. So let's check the hourly, 2 hour, And so a potential for a 2 hour right here. The problem with that would be it's a very long wick, right? It's a very high wick of a zone. This is about 8.4 points, and then the move following was only about probably, right, 20 points. So when I'm looking for a supply and demand zone measurement wise, an impulse move, how often? Yeah, definitely try to clean up your charts. If not, minimum once a week you should be cleaning up your charts. But if you're trading supply and demand and you see we're running through levels and running through zones, got to be cleaning those up almost instantly so you don't get thrown off side. Because if I have a broken demand zone from the other day and I forgot that it was broken because it's still on my chart, I'm going to try to go long in that zone and it's not going to work out because I forgot that it was broken. So it's very important to always keep a clean chart. It will also help you, again, read the market a lot easier, a lot more simple. So I'm going to be looking for this level to hold on gold. And yeah, I'm going to rhyme a little bit. So we're going to look for a hold on gold. We're going to put this to the right side so I could see that. And if we could hold here on gold and we have some strength, I'll look for some type of retest. It looks like we have an hourly imbalance right here. So what I want to know is, do we have any supply or demand in that hourly imbalance? 30, 15. We do not. I'm not seeing anything really of substance to tell me, hey, this is a good zone, this is a good area. So if anything, maybe we'll look for a retest or a hold of this zone or a retest of the demand zone. Other than that, if we do want to continue higher overnight, I'll be waiting to see how we react to this 30-minute supply zone, to see if sellers want to step in around 26.90 or if we want to break it and make another run for the all-time highs. Looking at the weekly on gold, do have to look at that. It's a long upper wick. Could be in for a bit of a pullback, right? A lot of people are bullish in the market. And best time to buy is when others are selling. Best time to sell is when others are buying. So now that we have some trade plans and ideas on crude, on gold, on ES and NQ, we're pretty much prepared and set for the week. Guys, if you want, drop a comment. Let me know if there are any charts you want me to go over. I'm going to go over SMCI right now. That was one that people recommended. And get into it. Let's see, SMCI, guys, again, don't forget, drop a comment. Let me know if you guys want to see anything else, any other maybe futures, any other stocks, whatever you guys want, and then we'll be wrapping it up shortly. But right now, guys, we'll go over equities, and I'll go over a few tricks for you guys who trade options and day trade. So the first thing I want to do when I'm looking to trade supply and demand on an equity is I want to turn off the extended hours. The reason I turn off extended hours is because there's no real volume moving the market at that point. The only volume in the market is when the New York Stock Exchange is open from 9:30 to 4. Therefore, that's the only time I'm interested to see how price is moving. Now, the first thing I see is this major low that worked as support. And then we worked as resistance 3 times there on SMCI. That's the 47,850 level. Open a swing trade position on SQQQ Monday morning. Any thoughts? Yeah, SQQQ is the inverse of the QQQ, which the QQQ is the NQ. We were going over NQ a little bit earlier. I was saying how I feel like we're probably in for a pullback, so that would mean long long SQQQ. But I don't think the pullback is going to be long-lived. As we do see, though, the pullbacks can be very strong. But, I don't know. I wouldn't fight the trend of bullish, but I would also be careful because of that big bearish divergence. Again, look at NASDAQ failing that all-time high, while ES, where are we at, was breaking that all-time high. So because of that divergence, I really want to be extra careful with the market. Now, SMCI, we had this key level right here. We'll just make that purple so we know. And we're in the hourly time frame. I see a strong basing right here at that key level and a strong impulse move lower, right? This was that crazy move that a lot of people had a huge profit off of, right? Now, this huge profit that they made, guys, we would have been able to see that off of this key level. Now, not only was this a key level, this was also a 1-hour demand zone. Now, how do I know this was a 1-hour demand zone? Well, we have our basing candle, our red basing candle, we have our impulse move, and it tried to give us continuation. Now we see with it marked out, it did hold as support right here. So because of that, whenever I'm trading equities, or when I used to trade equities, when we gap a demand or a supply zone, we instantly use it as the opposite. So because we gapped this demand zone, we would then look to use it as a supply zone. And again, giving us one great short, another pretty good short, and then a huge short position. So super important to have your own strategy, supply, demand, whatever it is, and completely stick to it. Because the longer you stick with one strategy and one concept, the more history you personally will have with that strategy and concept. With that, you'll learn. It's almost like when you learn a new language, right? You have to learn the ins and outs, the ups and downs. You have to learn sort of the lingos and everything, because just like English, some things could be sort of like slang. In the market, there is no perfect science, and there never will be, or else there wouldn't be a market. Because of that, stick to your strategy and stay with it. Find a mentor, stick with it. Whatever it is you have to do to get yourself where you want to be, do it. So we have our hourly supply zone there on SMCI. We'll come to the 30-minute. We see a bit of a basing candle right here. I see a few consolidation candles here and a move back higher, so I would maybe look at the 45, come back to the 90 hourly. It's like we sort of have, where was it, a 90-minute demand zone right here? And this is an okay demand zone because it swept some lows before it reversed. So again, using supply and demand, we could find our ranges in the market. This is the low of the range. This is the high of the range. If you were going for long positions, you would look to target 471. If you're taking short positions, we would look to target maybe 400 or a break below. Now, we haven't really taken, well, this is the last call out I had in SMCI. I was looking for 1030, guys. Look at that. Hit 1017 and reversed. So close. But look at this. This was a demand zone we used as support, and then we used it as resistance and resistance again. So it's just a matter of having your strategy and sticking to it. If you guys want to go over any other charts, definitely drop it in the comments now. If you guys want to do any Q&A, definitely let me know in the comments too. Appreciate you all for tuning in. Don't forget, hit that like button, hit that subscribe button. I will say it's also important if you do have other charts up like Apple and the equities when you're trading something like ES and NQ, to have those charted out with supply and demand too. It's important to see if Apple's holding a demand zone, if Apple's breaking a demand zone. You know, is Apple creating a demand zone? Are we in a range? I know Microsoft, let's see if we can find Microsoft. There she is. Microsoft, we had this range from here to here for quite some time. And then as soon as we broke this range right here, we noticed in the market that the NASDAQ was weaker, which caused the ES to become a lot weaker. We tried to break back above the range. We even opened up here at some point and closed and tried to push back lower. So at this point, I see weakness. I see weakness in the market, and I'm ready for some type of pullback. Look at all these red days on Microsoft, and yet it's still having trouble with this low right here. We have a daily imbalance right here it might want to gun to, but we also have a daily demand zone on Microsoft. Now, I love daily demand zones when it comes to equities because they could give us a really nice swing trade. Now, that's because the daily time frame is always stronger than a lower time frame, right? So if I have a daily demand zone, that's going to be a lot stronger than, say, we created a 30-minute supply zone above it. So I would look for this daily demand zone for a potential swing trade to bring us back to this range, about a $23 move on the Microsoft. So I would look for longs in there, probably look for calls around the 407 mark, and look to target maybe this pivot high, depending if we want to sell off from here. So now that we looked at Microsoft, we could also look at something like Google, which again is sort of getting weak here on the daily. It just took out this high and is trying to stay within its range. So I could add a alert on Google at the bottom of the range, so I know that if Google starts to sell off and pushes below the range, I could look for weakness in the market in total. Yo, absolutely, Ark, absolutely. My pleasure, guys. Always my pleasure to do this stuff with you guys. 30-minute, I'm looking 30-minute. We have a bit of a demand zone on the 30-minute, but I also see this consolidation. Makes me think we should have a different zone, a higher time frame zone there. Not seeing anything of substance, therefore I do not have it. So we have our 30-minute right there. We have a bit of a 30-minute after we created a gap right here. So I don't really create demand or supply zones when we're creating a gap after it, right? Thanks for charting ahead. Can you look at Amazon? Yeah, absolutely. Absolutely. And I appreciate you guys too. Always, always, always one love. Beautiful. Look at Amazon. What a beautiful chart near the 200 mark. So let's hit that daily time frame on Amazon. And as we see, we have our strength. We had our range from here to here for a little while. This is about our range right there. We're breaking out of the range to the downside. Now I would want to see if Amazon, I was going to say Microsoft, wants to take out... Yo, what's going on, Anthony? What's going on, bro? It's been a little bit. How you been? How you been? I hope all is well. So this might be a good potential target for lows, or a good area where we might see a reversal or a hold on the Amazon, right? So now that I have a daily area and a bit of a sell side liquidity sitting there too, I'm going to mark this out as like we did before, purple. Good, bro. Thanks, man. Yeah, you guys, I know it's funny. I had the glasses on today, dealing with the migraine all day, guys. I announced on Facebook and Instagram I was going to do this live stream, and then a migraine hit me like a truck. These are like, I forget what they're called. Some gamma ray optics. So they're good for like the screens and stuff. So I was like, let me use these for this stream, because again, I felt bad. I told you guys I would do this, so let me get it done for you guys. So we have our daily imbalance. We have some sell side liquidity. I'm actually going to call that sell side liquidity, not target. And now this might be an area that I'm going to use on Amazon to look to see if buyers want to hold. I'll add my alert. This is below 183. And again, if the market wants to turn around at this point, the market wants to stay strong, the market wants to push bullish, there's a good chance we will hold up in that area. Now I'm looking at the daily time frame too. And other than this pivot low right here, this pullback, the next low we would have on Amazon isn't really for quite some time until we have 170. Arguably, we do have this low around 175.71, but this wick was created to catch this imbalance created by this gap. So I don't really like to call that a low, because it also looks like it was just part of this move upwards. Guys, any other chart requests, recommendations, you guys let me know. We'll be wrapping it up in just a few minutes, so I can go close my eyes. Another quick trick, guys, when you're trading equities, you want to have your watch list with, let's say you're trading large cap stocks, Nvidia and SQ. Got you, bro, got you. We'll hit Nvidia next. When we have our large cap stocks in a watch list, what you want to do is you want to sort it by change percent. Because the reason you do change percent and not dollar change is because each dollar change will be a different percent change on that stock. What is a 1% change on something like Nvidia, or a 2% change on Nvidia that's at $120 a share, is going to be way different from a 2% change on Microsoft, which is $428 a share. And we could arguably look at relative strength based off of a percent look, not a dollar value, a percent value. When we're trading and looking at the markets, we always look at, has the S&P rallied X percent today? Has it failed X percent today? We never really see news-wise it went up X amount of points. We'll see it sometimes, that's for sure. But it's mainly a percentage game, and that's why percent is so important, especially when trading equities. Now let's check out Nvidia for our homie Anthony. Yep, look at NQ along with the Amazon. Just like I would look at Amazon when trading NQ, I'm going to look at NQ when trading Amazon, because these are all big tech stocks, and it's so important to be aware of everything in whole, the market in whole. If you trade the NASDAQ, watch equities. If you trade equities, watch the NASDAQ. If you trade the NASDAQ, watch ES. If you watch ES, watch the NASDAQ. Everything's sort of hand in hand, and the VIX as well. So we have a bit of a daily demand zone right here on, this is Nvidia now. So we have a daily demand right here. Daily demand. we didn't really have much. I want to see resistance-wise what we ran into up here, and obviously we ran into some resistance because this was a point that we ranged and then broke out of it. So again, we see the range, we broke out of it. Is this the retest of the range before we push lower, or is this the higher low? Again, this is a low right here, higher low, higher low. Do we want to create another higher low? 4 hour, 3 hour, 2 hour. Now guys, with equities, because we turn off extended trading hours, we're probably not going to find 4 hour zones or anything. Oh, excuse me. There's a migraine coming back. But we're probably going to find 30 minute, 1 hour, 90 minute. The reason I like the 90 minute chart is because the market opens at 9:30, hour and a half per candle. We had a 90 minute right there before a nice big impulse move and continuation. So again, I really like this daily time frame on NVIDIA. 116.50, 116 key psychological level for potential longs to target back up to about 130. Why is that a daily demand when the continuation was so weak? The continuation wasn't too weak, and the reason also is because we had this impulse move. So I always look for the impulse move. If the impulse move is weak, I don't care about the continuation. So it's always basing an impulse or number 1 and number 2. And then, yeah, the continuation was a bit weak because of this pullback. But in reality, the high of that move was about an $11 move, a 9% gain from that spot. So $11 move with about $1.69 stop, so almost an 8x, 9x on this zone to the high. So that's sort of why I like that as a demand zone, and also because it's creating these higher lows. Now, don't get me wrong, if we don't find buying in the zone, we don't jump in right away. If anything, we look to see if we want to sweep the low of that zone, because a lot of times we will sweep a zone before reversing too. Not all the time, very rarely, but it can happen. And the reason I would look for something like that on the NVIDIA is because we have another daily low just a few days prior. So I would see this as people trying to go short under 114.86. Even think of it as a big, like a furu guru saying, oh, I'm gonna go long NVIDIA above 125. I'm gonna short NVIDIA below 115. Like, isn't that some nonsense you would see online? So that's exactly what I look for to not happen, right? So I want to see this furu fake out a whole bunch of people to go short while we end up reversing, right? And again, that's using the market. I want to see if NASDAQ is holding a demand zone at that point. I want to see if NASDAQ is strong at that point, whatever the case may be. 30 minute, we have a 30-minute supply zone here on NVIDIA. Also, guys, trading equities, especially if you're a swing trader, gotta love your 30-minute time frame. 30-minute time frame is amazing. Even day traders, 30-minute time frame will really help you guys find that trend and confidence in your trades. 15-minute, alright, so that's about it for NVIDIA. Again, guys, this will be recorded, so you could always go back and check it out. What else did we say? SQ, and again, guys, any other chart recommendations, let me know. Other than that, this will probably be it. Look at that range on SQ right there, guys, getting real tight price action-wise. And a lot of times when price action starts to get tight, I'm not saying use trend lines. Don't take this as use trend lines. Price action's getting tight. And we could use trend lines to sort of find that and spot that. Trend lines are training wheels. They are not a guide. They are a training wheel. So I see that we're ranging. I see we're getting tight. I see these lows keep these highs. We keep making lower highs. We're trying to make higher lows. I'd be careful with SQ. I would look for a break above this 67.55 and strength, right? So let's look at the daily time frame real quick too, because the thing is the daily time frame's a bit weak, but I do really look at these lower wicks on the daily time frame. This is telling me that this squeeze right here, we took out the bottom of the range on this big red candle. We wicked back up twice now. If we could break that 67.68 area, so that 67.55 with momentum, easily can see 69.38. Let alone probably I would use next target 70.68. And then the next target would be a high. I love using highs and lows as targets or areas to get in or out. The reason for that is because a lot of times retail is using those for the opposite. Why is that daily demand? Oh, nope, read that one already. Alright, so that's sort of where we're at on SQ. I want a strong break here. I want a good green daily candle. Look at the momentum on these daily time frames. Look at this red basing, small body, long lower wick. We're sort of getting the same situation. Long lower wick, small body. So if we could break above, again, 67.55 with momentum, with strength, I really want to see a good $4, $5 move on SQ. So that might be a nice little swing trade right there, even for a few days, guys. I mean, this move we got right here, $7 move, $6 move, well, really to the highs was an $8 move. So if we're going for a measured move and we want an $8 move, we'd really be looking for something like $75 range, which again is at that high. So that's sort of where we're standing today, guys. And again, it's so important to, why do you not like to make a zone after a gap? That's a good question. So real quick, we'll cover that, and then we'll log off. The reason I don't like zones after a gap is because when we're creating zones, the impulse move that we talk about so frequently, you can't get an impulse move if we're just gapping up, because when equities gap up, there's no volume driving that gap. The market's just opening at a different price. There's no real market participants helping drive that price. You could definitely see it as like I did here with the bottom of a range, but I wouldn't see it as a supply or demand zone. Alright guys, now that we're all set for the week, I'm going to see you guys on Monday morning, 9:30. Be here or be here. No, I'm just playing. Be here or be square. I'll see you guys Monday morning. We'll try to take some trades on the NASDAQ, see if our short trade setups want to work out, see if the ES is also weak, and take a look at our equities as well. Have a great day, everybody. Have a great weekend. Thanks for signing in, tuning in with me. Hit that like button, hit that subscribe button, and I will see you guys later. Take care, be good. Hit that like button, hit that subscribe button, and peace out.